One of the things that really just drives me nuts about my job is when I look at a homeowner's insurance policy, or a car insurance policy for that matter, and I look at it and I go, what was the agent doing? Why did this person end up with coverage that either sucked, or was way above what they needed? What was the agent doing? So, what I want to do is I want to talk today a little bit about homeowners insurance coverages. So, in Florida, obviously, we deal with a lot of storms, we deal with a lot of weather. So that's kind of the main focus of what I'm going to look at here. I am an attorney at Citrus Grove Law Firm, and I am the owner. I specifically deal with homeowners insurance cases, personal injury cases, and personal injury protection cases. Focusing on homeowners, typically what we see is roof damage, water damage, pipe burst, things of that nature. But one of the first things you got to look at when you're looking at a case is what's the coverage? So, big thing that you want to look for when you're purchasing homeowners insurance is a replacement cost policy. So, what a replacement cost policy is it's a specific type of insurance coverage that will pay you for the cost to repair or replace that item in today's value. So, for example, this is going to be car insurance, but same idea. So, you buy a car 5 years ago for $10,000. Today, that same car costs $20,000 new on the lot. So, you're driving, crash your car, car's totaled, you need a new car. If you have a replacement cost policy, then your insurance company is going to pay based on today's value, meaning they would give you a check for $20,000 minus your deductible, for you to go out and buy a new car of the same exact type. They're not going to give you money to go out and buy a Lamborghini or anything, but same car and all of that. Now, that's if you have a replacement cost policy. If you have the other type, an actual cash value policy, that means they're going to pay you based on the depreciated value of the vehicle. Meaning, say your car's got a 10-year lifespan or expected lifespan. You bought it 5 years ago for $10,000. Now you've used half of its lifespan in the past 5 years. And so the insurance company is only going to give you $5,000. Well, that same car now costs you 20. So you're going to end up being the one having to come up with that extra $15,000. Now, like I said, car is a little different. Most car insurance policies are actual cash value, but the same holds true for your house. Say you have a dining room table that was $2,000 5 years ago. And that dining room table gets damaged because a pipe burst in your kitchen and it spread everywhere and destroyed your table. Well, if you have a replacement cost policy, they're going to give you the amount that it's going to take to buy that same dining room table today. That may be more, it may be less. You don't know unless you're looking at it. But if you have an actual cash value, they're going to depreciate that, which means you're going to be the one coming up with that extra money that you need to buy that same piece of furniture. So the other things that I look for on insurance policies as far as coverage is what's called law and ordinance coverage. So law and ordinance coverage is a specific coverage that helps bring your damaged property up to the current building code. So, for example, say you're in Florida, you have a house that was built in the 80s, and we have a hailstone hits your window, breaks your window. Well, maybe your window wasn't impact resistant. Maybe it wasn't required when your house was built. Well, now in 2022, you may be in a location where an impact resistant window is required. So, if you have law and ordinance coverage, your insurance company should be helping you to bring your house up to the current building code, meaning instead of just paying for that basic window that was there, now they're going to have to pay that extra money to put in an impact resistant window. If you do not have that law and ordinance coverage, you're the one doing it. Meaning your insurance company is going to give you whatever the cost of the original window was, but you're the one who's going to have to pay that extra to get up to that impact resistant window. So in Florida, the Florida legislature has seen fit to require that the insurance companies offer this law and ordinance coverage. And that's specific to domestic insurance companies, not if you have a surplus carrier, which is a whole different beast. So domestic insurance companies are going to be required to offer you that coverage. And under Florida law, if you want to reject that coverage, they have to secure a signed rejection form from you. If they do not have that signed rejection form, then the law presumes that that coverage exists. And it presumes that that coverage exists at 25% of your coverage A, meaning your overall dwelling coverage. The other two coverages that come into play a lot are water and mold. Most insurance companies in Florida try to limit both to $10,000 a piece. And what that does is that coverage is actually meant to take care of the tear out, the actual mitigation of the water or mold, and then the cost to put everything back together. So, yeah, if you have a little spot that's got mold, you might be okay. But if you have a kitchen leak and you have mold in your walls, it might be a lot more. So insurance companies do, obviously, they try to limit coverage no matter what. Most insurance companies do try to limit those to 10 or 20. Some are different. Some don't have limits. Personally, my insurance policy, I was put into a $10,000 mold and water coverage. And then when I requested additional mold to bring it up to, I asked for 50. The insurance company wouldn't do 50 unless I paid to have my entire house tested for mold. So the most that they would offer without that testing was 20,000. So take a look at your coverages. Your insurance and homeowners insurance is important, especially if you have a mortgage. If you have a mortgage, your mortgage company is going to have specific requirements for your insurance coverage. Most mortgage companies do require you to carry a replacement cost policy, so that way their investment's protected as well. So all of these documents that you get from your insurance company, all those letters and everything that everybody just ignores, those can be really important. When those come in the door, make sure you're reading them. Don't just throw them in the trash. You want to make sure you know what coverages you have and make sure that you're protected in case something happens. If you do have a claim, you do have a loss, work with your insurance company. Try to comply with what they're requesting from you. Make sure that you're complying with your policy obligations. And if you need help or if your insurance company stops working with you, give me a call here at Citrus Grove Law Firm at 407-378-5294.